Rohr here with an early concise highlight on Thursday, October 2nd, 2014. It's currently 6 a.m. U.S. Central Time, and this is going to be concise because so much of what has transpired with the foreign exchange is still very much the same as our video analysis in Tuesday's Global View and also the evolved write-up in yesterday's commentary. So what we have is quite a bit of macro influence that has weakened the equities. Looking at the market responses to all this, what we had is, again, that weakness in the S&P 500, although it is currently right around steady at 1940 so far overnight, with little influence elsewhere and waiting on the ECB and the Fed speak, we suppose. And we left this horizontal cursor in place to start the review because we wanted to show you right away that 1955 to 50 area we had been looking at as support was important not only on previous congestion but also as the halfway retracement of the whole move up from the 1900 test of support back in early August to the highs up in the 2012 area going back into a couple weeks ago. And the tolerance below that we had, that we'll look at more closely on the intermediate term charts, there was a daily gap right around 1945, which the market tried to hold early and slipped below. Now, the extended support starts at 1925 to 20, with the bigger support still down around the 1900 area. That would even, at this point, be the 200-day, or as we like to view it, 41-week average, moving up underneath the market at that bigger, lower, major round number, the big penny, as they like to call it, at 1900. But on the way back up, initially resistance at 45. You can see how the market stalled there late yesterday, and then anywhere up to 55, which sounds like quite a wide berth, but unless it's back out above 55, it doesn't have much chance to go back up and retest the failed up break and previous congestion up around the 70. And then, of course, we had highlighted consistently there's significant weekly congestion around 75 to 78. And the fact it could take a sustained rally to really take away the downside momentum, not really back restored upside momentum likely unless and until it gets back above 1955 is consistent with how far down the weekly oscillator has slipped below the lower runaway band on Wednesday. And we shall see, but that pretty much does it for the short-term view of the S&P 500.